So we want to talk about market structure. We want to talk about market structure now. Remember the content I sent you last was content based on the market structure. Remember the one that's remaining, alright, the one that we have not treated. We only do this thing, that support and resistance. We only did support and resistance, but now we are going to be looking at market structure. Remember when it comes to market structure, the market can only go in three ways. Alright, which is the uptrending one, the downtrending one, and the consolidation. Can you hear me clearly? When it comes to market structure, the market can only go in three ways, which is the uptrending one, the downtrending one, and the consolidating. Now, when we talk about the uptrending one, the market is going to be making significant highs, forming lows and highs like this, giving us a lows and high, then a higher high and a higher low like this, a higher high and a higher low like this. This is how the market can easily go to when the market is currently in an uptrending direction. And when this market is giving us an uptrending direction, you're going to be seeing something like this. All right, you're going to be seeing this movement. And when this movement is happening, it's called a break of structure to the upside, meaning that the market is giving us some break of structural levels to the upside when the market is currently trending up. Remember, I told you the market can go either the up direction, the down direction, or the consolidating. Consolidating is the one we have already talked about, which is the support and resistance when the market is reacting in 2 points, the support point and the resistance point. Now, this other one that we have here is based on the structural movement to the upside, giving some break of structures all the way to the upside like this. We also have this one, which is also be called a break of structure to the upside. All right, so maybe you're looking at the market from the, let me just say from the higher time frame. All right, let me just say you're looking at the market from the higher time frame here. You're going to be getting some break of structural levels all the way to the upside. And if you are having a break of structure here, meaning that you are not going to be expecting the market to push down and go below this point. All right, I'm still going to be using this concept based on the fib retracement. I'm still going to be teaching you this based on fib retracement. We are not meant to expect this market to go below this point like this. All right, if this market go below this point, meaning that there's going to be a change of character from here. Take note of that. All right, so remember when this market is giving an uptrend, as I said, it's forming higher highs and higher low. We have the higher highs like this, and we have the next lower low like this. Let me just quickly plot that out real quick. Put it in a particular place so that you understand. We have this movement happening. So these are higher lows. I'm going to be putting it in a place where it's meant to be. I'm going to be putting it in a place where it's meant to be. Now this is a higher low. Let me just quickly remove this thing here. Higher low. This is going to be a higher low here. Let me remove it. Higher low. This one is going to be the higher high. Remember what I told you, when the market is trending up, it's giving us higher highs and higher low. Alright, higher low is when the market has already retraced back. You understand? That is when it's going to give a higher low. Then like this. Alright, let me just quickly clone this one first and make use of it. Then this was the last higher low that we have. And I told you earlier that if the market go below this higher low, let me just say this sell movement happens and decided to go below this point. The market is meant to react at this particular level and push up back. But the market fails to react. For instance, I decided to push below this point, meaning that there is a change of character or market structure shift. That's where you will be hearing some traders say something like CO CHOCO, CHOCH like that, a change of character, or MSS is also a market structure shift. And when this thing happen in a particular market, meaning that there's a shift in structure or there's a change in direction. And when you have that change in direction, meaning that that uptrend is not going to hold, then you'll be seeing the market making, let me just say, pullback is going to happen and then start giving us the next low to the downside. all the way to the downside. That's why I decided to tell you that if the market, if the let me just say when we have the trade, I told you earlier that the trade can always make three movements: the uptrending, the downtrending, and the consolidation. So if the market structure shift happen, meaning that either two is going to take place, either the market will start trending to the downside or a consolidation will happen before the next movement to the downside will occur. So when the market is trending to the downside, it's going to be giving you highs and lows like this, which can be called lower lows and lower high. All right, let me just quickly specify that out. Let me just quickly specify that out. Here is going to be the lower high, and the lower low. So let me just quickly clone this. So that I would just want to put it in the spot where they are meant to be, so that you can be able to understand it very very well. Understand where I'm coming from. Let me just quickly clone this real quick. That you are going to see it. I'm going to be placing this here. This is when the lower high is meant to be. Lower high here, then lower low is going to be at this point. Lower high is going to be at this point. Lower low here, and the next lower high is going to be at this particular spot here, which is this particular one. Now, this is how it is. Now, as I say, this market is currently trending to the downside, meaning that a break of structure is happening here also. Break of structure to the downside here. Then we have another break of structure level also to the downside. Then we have another break of structure like that. All right. As far as the market is giving a new low, meaning that the last low that was given is going to be marked as a break of structure. Now, this is just the market dropping to the downside, giving a new low, meaning that this last low that was just taken out is going to be the next break of structure to the downside. As simple as that. When the market gives you a break of structure to the downside, there's surely going to be a pullback. But as a trader, you don't know when that pullback will happen to. You don't know the particular point is going to reach. That is where fib retracement comes into. All right. When the market is pulling back, fib retracement is going to give you an area whereby you can be watching out for the next pullback. Let me just emphasize on this. Hope you understand this thing properly. If you have any question, please ask me very, very well, so that we'll call on that. Let me just remove this clearly. Let me just quickly remove all these things that I've marked out so far. Or let me just use the plain chart. Let me use another plain chart. Now, looking at on this point, let me just say we are currently on an uptrend and the market is currently giving us lows and high like this, right? Lows and high. And you will know that when that retracement is happening like this, the market will retrace in a certain OB, or let me just say and a fair valid gap, but I'm not going to recall on that yet. Now, let me just say the market has given us a new high and started pushing all the way to the downside. Now, the fib retracements you are going to use is going to give you a certain area whereby you can be looking at for the next entry point. Now, if I move this thing all the way from this particular high here, you can see the zero. This is zero, which is the one that is up, is lying on the new high on the market here like this, and this one here is lying on the particular low, which is this particular low that we have here. Now, if you check clearly here, we have different numbers. We have the 0.5, we have the 0.6, and we have the 0.7. Now, this 0.5 is what we call the discount area. Most times it's just like 50%, and the market is not meant to retrace very very like to that area. It's meant to break below that area. If you check clearly, we have the 0.6 and we have the 0.7. Now, a proper zone where this market can come to is below the 0.6 to the 0.7. Anywhere around that point is going to be your next buy to the upside. You understand? So this fib retracement is going to help you to look out for where to be looking at for the next opportunity of that retracement to be taking out that buy trade or that sell trade to the other direction, getting the next break of structure around this point. All right. When you where you can be use Fibo replacement is either the market is trending up or the market is trending down. We are still going to check this on the chart. Right. I'm still going to make emphasis on this on the chart so that we can easily see it clear. All right. So you can easily understand how this thing works. You understand? So when this market has already moved like this, as far as the market has already given you a new high, meaning that let me just quickly remove this, meaning that this high has already happened. All right, then what you are going to be doing is that you are going to be waiting out for a pullback. You understand? You are going to be waiting out for a pullback. Let me just say pullback in a particular zone. And remember, as I said earlier before, when this market is pulling back, you plot out your fib retracement also from this particular low here to the next high, and then the market comes back to a certain area of the 0.6 to the 0.7 again. Mostly the market can relax here, the market can stop here and then decided to push all the way to the upside. But mostly this is going to be a liquidity point. The 0.5 area sometimes can easily serve as a liquidity point because the market can push up and then decided to get a next break, taking out that liquidity point, taps into the proper area before the next pull all the way to the upside happens. Alright, the same thing applicable to the downside, just vice versa of the down part on same thing. Alright, when the market is trading all the way to the downside like this, let me just say the market is making significant higher lows and then higher lows and lower low like that, like this. Then your fib retracement is going to come to after the next break of structures has happened from this particular point. Right, after the next break of structure has happened, remember the market must gives a formation of pulling all the way to the opposite direction. That is when you are going to make use of your fib retracement, plotting it from the high there to the next low here. Then remember a particular area is going to be around the 0.6 to the 0.7 for a proper retracement to happen. That is when you can be taking your next movement like that all the way to the downside. You understand? Giving us the other break of structure like that. Hope you understand this very, very well. So this is how to use fib retracement. I'm just emphasizing on this fib retracement because fib retracement can only work when the market is either trending up or trending down. It can't work when the market is currently consolidating. Alright, so that is just how it is about market structure. And I told you earlier that if the market decided to go above this point here, let me just say the market goes above this point here like this and decided to break out this high, meaning that there's a shift in market structure, right? If the market decided to go above this high, remember a low has to be created. As far as this break of structure has happened, alright, then if the market gets above this high, this particular point here, meaning that a shift in structure has already occurred. And when a shift in structure has occurred, you are going to be waiting out for the next pullback. Alright, for the next pullback, you are going to be waiting out for the next pullback like that. Let me just quickly make use of my tools. Just pull back then to be getting it for the next buy all the way to the upside. Alright, this is just how it normally happens. Nothing else. As I said, the market can only move in three directions, either the up part, the down part, or the consolidating, right, based on market structure. And when you are using a market structure for the trending movement, you are going to be following up with your fib retracement so that you can know the proper origin or so that you can know the upper area whereby you can be getting in for the next opportunity there. So let's quickly look at a clear chart on this so that we can able to identify few of those concepts we just mentioned here. So let's quickly make use of gold for this particular movement because I noticed that most of you guys like trading gold. Any small thing is on good, any small movement you want to trade good and all that. So let me just quickly change this particular market to gold. We are still on gold, yeah, we are still on gold. Right, I just want to see a clear perspective of the market. Let me just quickly make use of let me just use the 1 hour time frame as an example. Now, we want to find where the market makes a structural movement to the upside. Any place the market is giving us a structural movement to the upside, that is when you are going to be applying the fib retracement. Now, looking at this point in the market from here, all right, we have this market giving us a structural movement, right? You can see from here, it's giving us higher highs and higher lows, giving us some break of structure here because from this part here, we have the break of structure to the upside. And after that break of structure to the upside, what did you see? The market is pulling back to the downside. And this was the last origin that causes this break of structure. As for the market is trending up. Now, as I told you guys, when the market is trending up, you plot out your fib retracement from the low here to the next high. This was the next high that the market has created after a break of structure. Then you wait out for a pullback. Where is the pullback I told you about? Below the 0.6 to the 0.7. Boom. You can see the way the market pushed down to that area around the 0.7 level, and after that you can see the way the market push all the way to the upside. Now if you're taking the trade around the 0.7 level, your stop loss is just going to be a little bit below that zone here, exactly like that, and the next target is going to be for the market to give you another break of structure from this particular point, another break of structure from here. All right, as I said, your entry point is going to be as far as the market has stepped into the 0.6 area, that is when your entry point is going to be. All right, anywhere around the zero point 0.6 area. You can see the way the market dish out like that successfully. All right, using fib retracement, as I told you, fib retracement is going to give you an edge whereby you can be looking at for the next entry point. Okay, now that this market has given us our next break of structure here to the upside, let me just quickly identify that out. We are still going to check some other charts again so that we can know how this thing works. I want you to get it very, very well. Now the market has made a significant movement to the upside from this low here to the upside. Then you plot out a fib settings, all right, fib zones from this low to the next high because this was where the break of structure happens. So you can see from the next point there, you can see that after that market gives us the last break of structure there. You can see this last sell candle was the pullback that happens back to this zone. You can see this one decided to mitigate on that zero point 0.6 area there. You can see I told you about some levels, all right, which was some candlestick formation that before when the market gets to your zone, you're going to see some candlestick formation that will align there. If that entry is going to be valid, I told you about some candlestick formation like the bullish engulfing candle, some tweezer candlestick. Some normally happens by chart patterns. All right, some normally happen. You can see from here after the market steps in on that zero point 0.6 area, it gives us a candlestick formation, which was the bullish engulf candle around there. Then that is when it's going to be your next entry point. From that point, you are going to take out the market like that for a long, putting your stop loss just a little bit below that bullish engulf candle here. Then your next target must be on the next high because the market has to push up and gives us a new break of structure like that unless there's a shift in market. All right, unless there's a shift in market. Now we are going to check out for that shift in market. You can see we are aligning it here. We have the next break of structure to the upside. Now this is what happens after the market has given us our next break of structure to the upside. Then you can see what the market did. Now in this instance, you make use of your favorite retracement from the low to the next high that has been formed. You can see that this market pulled back to the next zero point 0.6 area and started reacting on this particular zero point 0.6 to the zero point 0.7 zone, which is still going to serve as the next entry point. Now this is it. All right, now you can see the market has been reacting on that very zone for long. Now, if you take out a buy on that particular zero point 0.6 area where the market has been reacting on, then stop loss just a little bit below the zero point 0.7 area there. Let me just say around this point in the market. Then you normally you are going to be expecting the market to give you a new high. But you can see this market decided to play out a little bit, come to the next point, but fail to give you another break of structure from that particular level. Right, you can see the market react and then the market boom all the way to the downside, giving us a shift in structure. You can see the market decided to go below this point, and when the market has gone below this point, let me just clear mark that out, meaning that there's a shift in market. And after you can see the market go below this point, the market start pushing all the way to the downside. Are you seeing it? Because there's a shift that has happened in market structure. Exactly like that. Alright, they are all over the chart as I said. They are all over the chart. They are all over the chart everywhere. Looking at this point safe, you will notice that we have some break of structures to the downside from this particular here. We have some break of structure. This is on gold. Remember, you have to check out if you have a particular break of structure. You can see from here, the market is trending all the way to the downside. And after a break of structure happens to the downside, for instance, you plot out your fib retracement from this particular high to the next low here. You can see where is your entry point. The market pushed back around the zero point 0.6 to the zero point 0.7 level here, which was inside here for this correctional movement here that happens. If you are getting in on that zone, meaning that you are going to be taking in a little entry point from this particular area, and then your stop loss is just going to be a little bit above this zero point 0.7 area or just a little bit above the zone, then your next target is going to be for the next low, because if that market is meant to respect that movement, meaning that the next break of structure is going to happen all the way to the downside, giving you another break of structure from this particular level. All right, let me just quickly remove this thing so that you can see another big area from this level here. It's as simple as that. All right, unless there's a shift in structure, you can see after this market wants to pull back again to the downside, to the upside, you can see the market decided to take out this high. All right, because this movement, this massive movement to the upside was caused by the NFP news. After giving us, we have that shift in market structure from here, which I told you guys that either you see MSS or you see the next change of character. You can see after that, that is when that uptrending movement decided to happen. So we just emphasize on this before we enter this Hope you are seeing it. All right, they are always in the market. I always tell you guys that you can always find them shift in structure from here. Remember, the market has to be trending now. We have this shift. We have shift all over this point here where the market is pulling all the way to the downside. But this market decided to retrace back. If you plot out your fib retracement cycle from this particular high to this particular low here, the market decided to retrace towards the zero point 0.6 to the zero point 0.7 level. Where is this point? And you can see how the market decided to short all the way from this particular low to the downside. That's why I told you that your stop loss is just going to be a little bit above, but your next target is going to be below, because the market has to dish out another break of structure like that to the downside. Exactly. This market pullback also around this zone and still gives us the next movement always to the downside, giving us the other break of structure from this particular point again. Unless there's a shift in structure from this point, that is why the market starts pushing all the way to the upside like this. So hope you understand it very, very well. All right. As I said, if you have any question, you can do it to notify me in the comment. This is just based on market structure. Either the market is moving up or the market is moving down. All right. So that is it on this.